Welcome to the Power and Market Report. I'm Albert Liu. Happy to be joined now by Wojtek Wodzicki. He's the president and CEO of NGEx Resources Inc. Dr. Wodzicki holds a doctorate in geosciences from the University of Arizona, and he joins us today. Sir, thank you for joining me. We've been trying to set this up for a while, so I really appreciate it. How are you?
Well, thanks for having me, Albert. It's great to be here.
So just for people who don't know, NGEx is a Canadian mineral exploration company, and you have projects in Chile and Argentina, but can you just give us a quick rundown on who you are and what you do?
Yeah, well, NGEx is a Lundin Group exploration company. We've been a very successful explorer in South America. We put together 3 significant copper-gold discoveries that all sit within about 15 kilometers of each other. Jose Maria and Los Helados, the 2 largest projects, are with NGEx, and then last year we spun out our 3rd project in a very successful spin-out company called Filo Mining.
Okay, so there's lots of ways we can go with this, but I did have the pleasure of watching your presentation in Vancouver, and I think people were kind of excited about your copper projects. So let's talk about that first in a general sense. You were very clear that you have a bullish outlook on copper, and that electric vehicles are going to be a big part of that demand. So can you just start there, and let's talk about the copper story?
Well, sure. I think as all of your listeners are going to know, we've gone through a very significant bear market in all commodities, including copper. The market probably peaked in 2012, and it's been 5 long years of steadily dropping prices. But it really looks now like we hit a cyclical bottom in early 2016, and we're seeing a significant uptick in what is hopefully the early stages of the next bull market. And we think that uptick has strong technical support. There are good reasons for that uptick. It's probably more than just a cyclical upturn. We're seeing strong trends on the demand side. A lot of people are talking about electric vehicles and how significant just green energy in general is going to be for copper demand. So, some just quick numbers. A electric car like a Tesla or any of the other electric models uses about 5 times as much copper as a conventional car. And so as we see the uptake of that technology, that's going to drive a lot of copper demand. And it's a similar story when you look at other sources of green energy or renewable energy. So whether it's windmills or photovoltaic solar cells, all of this stuff uses copper. And copper is going to be one of the big beneficiaries as the world goes green in energy. And companies like NGEx that have large copper resources are really well placed to benefit from that trend.
Yeah, just sharing some of these charts for the viewers, and you have a nice one here showing gasoline, conventional gasoline cars versus hybrids and electrics, and you go from 55 pounds of copper wiring to 275, and even the traditional gasoline cars. I have a friend who works in semiconductors, and he was telling me that the bill of materials for even the typical new gasoline-powered car is significantly in the electrical components. So this is a trend that happens even if you push out the adoption of electric vehicles. This is still something that's going to happen.
Yeah, and I think another really important point is that for there to be significant growth in copper demand, we're not looking for anything extraordinary to happen. Like, these are just kind of the normal trends and kind of a reasonable adoption rate for electrical cars, and these other forms of green energy are going to drive significant demand. So we're not looking for some kind of magical hockey stick uptake of any of these new technologies. Just kind of the general reasonable uptake is going to generate a lot of additional copper demand.
So if we look at the chart that you supplied for us, this is 5-year copper spot. You see, a dramatic fall, like you said, over several years. This is obviously going to, or has caused pain. What price do we need to sustain economic development?
Well, a lot of people, this is something that a lot of analysts think about and look at, and most people think that it's going to require sustained prices above $3, 3.25, 3.50. There are different estimates of what the incentive price for new production is, but in almost all cases, people, in order to make these big capex decisions that are required to build a new copper project, people are going to want to see prices, above $3, and we're finally getting there. And the reason that that's important is that sort of as you cross through those critical prices on the way up, that's when M&A activity starts to increase. That's when interest in acquiring and building new projects starts to build, and that's when the interest and the share prices of companies like ours really start to move. And I think we're just in the early stages of that next cycle.
Okay, let's flip back over to the demand side for a second. Do you have a personal view on electric cars and what the adoption rate will be? It seems to be clear that the industry is going that way, but I guess it's important to try to understand how quick that adoption is going to be.
Yeah, I mean, I'm far from an expert on that, but I think that probably the best way to think about it is that the one slide I have with the pictures of some polluted days somewhere in China, probably Beijing or Shanghai, and I think that's going to be one of the big things that drives the adoption of these cars. It's going to be major countries that are potentially going to just skip over the gasoline and diesel cars and try to take care of these severe air pollution problems that they're having. So I think it's hard to say exactly what the uptake rate is going to be, but I think it's reasonable to think that it could be a lot faster than a lot of people are projecting right now, and it's driven by some powerful trends, like people just not wanting to breathe this bad air that you see in some of these photographs.
Yeah, it actually looks like a bad copy here, but it's actually just the smog. It's quite striking. Now, the other side of this is, even if we don't get the adoption that some people think that we're going to get, you stated quite clearly that we don't have to have tremendous demand growth for the price to come back, or tremendous economic performance. So what kind of performance do we need? You're talking about average performance would be very bullish for the copper price. What do you see as average? Let's start with China, for example. What kind of...
Yeah, I mean, people always talk about copper being, Dr. Copper and this good proxy for economic growth. And I think, most of the forecasts out there, the ones that aren't kind of crazy optimistic, are talking about 2.5 or 3% growth for the world economy. And copper kind of moves in lockstep with that, and you're talking about big numbers here. So even that kind of ordinary growth rate leads to a lot of additional copper demand. And I think what's equally important, and I'm not sure if this is what you're going to ask about next, but one of the other things that happened during the down cycle is that there was much less investment in new production, and existing mines, every day they have a little bit less of what they're mining. So there's a consistent decline in reserves. There's been quite a consistent and long-term decline in the average grade of copper mined. As the best material is mined, you're kind of left with the lower grade material. So those supply side trends are also feeding into these higher copper prices that we're seeing now.
It's funny. I assume you've done this presentation enough times that you have the slides memorized. You know exactly where I'm going with it. But yeah, depletion of existing mines, scarcity of new discoveries, that being a problem. Like Rick says, bear markets are the authors of bull markets. Let's transition now to what you're doing as a company. When I think of commodities, there's a lot of ways to invest in commodities, and one way is through some vehicle that gives you direct exposure to spot or through the futures market. And the other way is through companies. And one of the advantages to going with a company, whether it's a gold mining company or other company, is that you have, if you pick carefully, you have very intelligent and experienced, smart people at the helm making decisions. And I think you're going to see the result of that is going to be seen after this bear market turns into a bull market. So what are you doing at NGEx, or what have you been doing over the past couple of years to take advantage of where the price has been?
Well, we've been lucky enough to be funded to allow us to continue de-risking these projects and basically positioning ourselves for the market that we're going into right now. So, what we used the last couple of years for was to just keep picking away at de-risking the project. So, for example, we were able to acquire all of the surface rights that we would need to develop our flagship Los Helados project. We worked on our engineering studies. We worked on optimizing those engineering studies. We worked on all of the baseline environmental work that is needed to apply for permits. So basically, we tried to just remove all of the roadblocks to these projects being moved ahead when markets turned, and we used the quiet time that we got over the last couple of years to take care of all of that kind of housekeeping stuff and make sure that when markets turned, there was nothing standing in the way of our projects moving ahead. So that's what we were able to do over the last few years.
I'm wondering, does the market reward you for doing this kind of work? For instance, getting this baseline environmental work out of the way?
It doesn't reward you in the short term, but where you get rewarded is, imagine yourself as a major company doing due diligence, looking at a project to acquire. The kind of work that we've done over the last couple of years is very important to those sorts of people. So you do eventually get rewarded because getting that work done puts you at the front of the line of projects that these guys are looking at.
Okay, very good. And the last thing I wanted to ask you about was the spin-out of Filo Mining Corp. What went into that decision? And of course, your shareholders are still shareholders of the spin-out. But what is the consequence to NGEx having done this?
Well, I guess what drove our thinking on the spin-out was the feeling that we had a great project at Filo whose value was not recognized by the market. And I guess this is one of the issues with junior companies. A lot of times you just get valued on your top project or on your top two projects, and then everything that's behind that, the rest of your portfolio, kind of gets discounted. And that's what we felt was happening with Filo. So, and I think the performance of Filo since the spin-out, I think, vindicates that view. So we've created about $150 million worth of value and counting with that spin-out. NGEx has basically stayed flat, so we didn't lose any value in NGEx by taking a significant asset out of it, and then our shareholders have benefited from the increased visibility of Filo. So it's been great for our shareholders because we did the spin out as a distribution to existing shareholders, and so all of that value that was created accrued to those original shareholders, which has been great. And I think it just highlights the general approach that Lundin Group companies take, which is, we're always looking at the projects that we have, we're looking at the vehicles that they're in, and we're trying to think, where are they going to create the most value for shareholders? And Filo spin-out is a really, really good example of that kind of thinking at work.
You see these arbitrages occurring in different ways in different markets. Why do you think that the junior mining sector has this type of arbitrage, meaning you're valued on your top one or two projects and sort of everything else is discounted?
I think investors like a simple story. That's part of it. I think the other part of it, and this is why where the advice of someone like Rick Rule and Sprott is useful. I think junior companies are harder for the average investor to understand. There isn't cash flow. A lot of your valuation depends on your evaluation of the people leading the company, and oftentimes a very highly technical evaluation of the quality of the projects, which is not always easy for the average investor to do. And so I think that's why you see these kind of pricing discontinuities, and and when everything is being sold, high quality projects get sold down the same way that lower quality projects get sold down. And I think it's those pricing inefficiencies, which I think Rick talks about quite a bit in these smaller companies, are what creates the opportunities.
Very good. I want to conclude here, but before we go, I want to let the viewers know that they can find out more about your company by going to ngexresources.com. You can learn about their projects. Also, go to the investor relations section if you're interested in the company. Sir, thank you very much for joining me. It was great to have you on the show. And also, I want to mention that your talk is available at sprottconference.com in the form of a downloadable MP3 for purchase, as well as the slides. So, sir, thank you very much for joining me, and let's look forward to doing it again.
Yeah, thank you very much for having me, Albert.